Want the inside scoop on how traders are really doing with POW? Curious to see unfiltered results straight from our members, the wins, the challenges, the real story? Today, I'm taking you behind the scenes to show exactly how our traders performed in the last few weeks. No filters, no fluff, just real results. Let's dive into what's been happening, the good and the bad, in today's video. All right, so here we are inside of the community, and we're going to start, going back to March 14th is where we'll start, and we'll move up to date. So the last about month or so of activity. Specifically, this is the weekly wins and reflection section. Right now, we're going to zoom in here on the weekly wins. We'll start right here with Ivan, who talks about after a rocky start on the week, JPY hit EPs, which was at the beginning of the week. He then reoptimized his new gold set, seems to be doing well. So we'll take a look here at the image he shared. So you can see this is his MetaTrader account up. I don't know the account size on this, but it looks like I would assume it's probably 100K because that's typically what we're trading. So that would be just under 1%. So it sounds like he maybe had some losses early in the week, which totally happens, especially with market conditions the way they've been the last month or so. But a quick reoptimization, a different strategy, and now starts chipping away, making those losses back. And then you can kind of see the activity with the community sort of going back and forth. Dialogue will start, and the POW team members are in here to help out. So here's Pierre. Good day in the market. Trade gold live. Won't do much further, so hopefully go to the blue next week. Don't like to leave trades over the weekend because you never know what will happen. Yeah, that's a really good piece of advice for anybody. If at all possible, close things out over the weekend, especially in these volatile markets, because you just don't know what might happen, what gaps might occur over the weekends when decisions are made or things are talked about. So here is Pierre's account. Let's take a look at what it looks like on the screenshot. So just over $1,000 gain on the week for Pierre. So an outstanding week. Nice job, Pierre. Let's keep moving here. Adam sharing his account here. 3% week with very minimal drama on the cent account. I'll be upping the risk settings Monday to catch more profit. Yeah, great job, Adam, here. So if we take a look at this account, up $3,000. This is a cent account. So one of the things that we teach in our community or show our members that they're able to do is open up a cent account, which allows you to trade 100,000 cents, for example, as opposed to $100,000. So it allows you to use the leverage that you would have on a 100K account, but only trading $1,000. So you can have less capital at risk, but trade with seemingly larger lot sizes, which enables you to run strategies that would typically only be effective on large capital, can be effective on small capital. So this is an example of an account running with those settings. So great job, Adam, with the 3% week. We talk about all the time on our channel, in our social medias, all over, about 2 to 4% a month being a perfectly reasonable target to make. Very sustainable and not hard to make once you get the system down, and it won't cause a high level of stress. But you can see in here as well, there's traders like Adam who did 3% in a week, not even in a month, but in a week. And you can look at things as averages as well. You can say, hey, you might have some up weeks and down weeks, and that might average out to 2 to 4% a month or more. But generally speaking, we put that target place in mind, because if you can scale your capital up and you can compound grow your capital, 2 to 4% is plenty to make on a monthly basis to overtake the salary of your day job and allow you to remove yourself from that and add time back into your life. For example, it's enough to grow investment accounts. If you have retirement accounts or anything that's long term, 10 years at 2 to 4% a month is an insane amount of growth. So that's why we talk about those numbers. That doesn't mean that the capability of the product by any means is limited to those numbers, as you can see by Adam's success here as well. Here's another one from Adam, 2% equity cap. So this is something that we can do inside of our tools, which inside of the EA, you can set a setting that allows you to stop the EA from trading once it hits a certain profit target. So you can say, I only want to make 1% a day, and then I want to be done trading for the day. For example, here, Adam set his equity cap to 2%. Now, in this case, he said, hey, he forgot to turn it on, and it ended up benefiting him because this account made more like 6% in a situation where he might have only made 2% if he would have turned it off. But by the way, you'll be able to see that sort of thing in your back test, because although this made more in this day, there is a chance that particular strategy actually performs better in the long run if you cut it off early because of the reduced risk. On the flip side, there might actually be that it makes more money if you turn the equity cap off. But there's tools that we offer, namely our tool Portfolio Builder, which completely automates the entire backtesting process and scales the backtesting process to allow you to test multiple pairs multiple strategies, multiple EAs all at once in order to find the best set files possible. But anyways, all of those tools are out there so you can statistically understand what is the best way to move forward with your accounts. But in this case, Adam's saying, hey, he determined that he wanted to do a 2% equity cap, forgot to set it up, ended up rewarded for that mistake, we'll say, with a 6% gain. Here's Michael running a similar strategy, 2K equity target, but his obviously was turned on. So here is his 2% gain for the day, and he's trading some indices here. And so after this, the bot shuts off until the next day, and he's happy with his target. And you can see his comment here, rinse and repeat. 2K equity target hit on a Monday for the second week in a row. So this is a great example of some consistent results coming from Michael. So, and now here's some comments in from Luke, and you can see Michael responds quite quickly here within a few minutes. Luke's struggling with the same strategy, and that happens, right? So you see others winning in the community, you try to replicate what they're doing or create your own version of what they're doing, which is exactly what the community is here for. And then Michael talks about, hey, we have some that are doing well, some that aren't doing so well. And that's the point of diversifying and having multiple accounts. You'll have some that are doing extremely well and at certain times, while others are maybe taking losses. But the balance of all of that enables you to run multiple strategies at multiple times. There is no way to accurately predict what the best strategy is to run tomorrow or the next day or any day into the future. But if you diversify and have multiple strategies running and your probability metrics and your risk reward metrics are tight and in line, it's okay to have accounts that are in loss because the accounts that are winning are going to more than balance it out and move you into profitability. And that goes back to what we talked about earlier about, hey, some accounts might gain 3% in a week, but if you're diversified, you might have some that are losing a bit in that week, and it might balance out to that 2 to 4% a day in the long run, or potentially more. So the concept here is to always have multiple strategies because you don't actually know what the best strategy is until you see it in hindsight. But if you can test constantly and add new strategies and new methods to how you're trading, you can be more likely to have the right strategy playing at the right time and overtaking any losses that are coming in the other direction. Let's take a look at the replies on this one. Yep. So these guys are yes. There's just some chatter going on back and forth, and some responses in from the team members. Here's Pierre. Am I the only one being punished by gold? Certainly not. Gold punishes 99% of traders on a regular basis, which is why there's only 1% that are successful in this game. So this is not uncommon, but not the best results for last week and last 2 days. This makes me struggle to trust the process. Positive thing is I'm not at a complete loss for the month. Target is 4% for March. As it stands, I'm at 0.7. So here's the thing here with this. This is really important from a mindset perspective, right? Pierre is profitable. He is up 0.7% currently. Statistics say that only 1% of all traders are profitable at all. Retail traders that come in and try to manually place trades typically get their accounts wiped or blown very quickly, especially if they're new or just getting started. If this is a new process for Pierre that he's learning here, and he feels like he's struggling, but he's up 0.7% overall, despite having some turbulent days in the last couple of weeks, in the last few days, in the last few weeks. In a market, I'll say, that is probably the most challenging that we've seen in several years, based on all of the tariff changes coming from the US, based on just general economic and geopolitical sentiment. Markets have been insanely volatile. So to be up at all, in my mind, is a positive thing. You can't control the markets and you can't control how much they're going to give and take from you. But if you've got a strategy that has enabled you to be profitable despite taking losses, then you are miles and miles ahead of most people on the markets. So let's take a look at the screenshot of his account here, kind of showing some losses here on gold. But here's the thing, right? So you've got equity protection and you've got stop losses and all these things, risk mitigation built into the bots that we provide, into the EAs that we provide. This loss is a little over 1%. This is completely manageable. If this was to let run just based on the swings that we saw gold do, this could have really blown out of proportion if the risk wasn't managed properly. So the win here, the win inside of the loss, is that risk management was done properly and saved the account. And the result, the net result of that good decision making on the risk management and not the emotional trading that might come. If you're a manual trader and you see those losses, you might do things like revenge trade. You might try to make back those losses very quickly despite the markets going against you and you knowing that. But the EA has been set to risk mitigate and to turn off and to save it for another day. And because of that, despite these losses, he's still up 0.7% on the account. And now he's got a target for 4% in March, and maybe we'll see further down if that was achieved or not. But this is where sort of fixed targets on a percentage basis in your mind, you have to be really careful with what you allow that to do to your decision-making process. 2 to 4% is an average over a long period of time. You can make 2 to 4% a month with one of those months being down 5%. I don't suggest that, obviously, and that's not what we aim for. But the point is that you will have some months that are high, some months that are low, some months that are green, some months that are red. But the average over time can be 2 to 4% a month, and that's all you need for a massively sustainable occupation in trading in the markets, again, through automation. So you always have to keep the perspective that it's a long-term game. It's not a month-by-month or day-by-day game. So that's the advice I would say to Pierre on this one is, yes, have targets, have goals, but be flexible with how they are achieved, because you never know what's going to happen in the following months. Always know that if you're profitable at all, you're beating 99% of the market. And there's lots of replies in here. I'm not sure if they say the same, but yeah, you can see, hey, it's not easy. Trading psychology is difficult. And so you can kind of go through here and kind of just see some of the support from the community here. Okay, so we'll scroll down now. So yeah, thanks, Pierre, for putting that in. Here's Michael talking about his March accounts so far. I think this was probably towards the end of March, wrapping up. 4 sets total, mix of different time frames, trend, reversal. How many would quit when seeing these 4 losses in a row? That's the key thing here, in my opinion. I could have stopped as I hit the 2K equity target on Monday, but decided to let it play out and see. If I had stopped, I wouldn't have seen those 4 losses and would technically be in profit right now. This is a game of psychology. So what Michael does is he runs his either live accounts or prop accounts, whatever they are. He has demo accounts copying into those accounts. On the demo accounts, he lets those things kind of just play out. So wins, losses, whatever they play out. On the accounts that are trading live funds, he makes decisions about when to turn things off, reduce lot size, etc. But by always letting the demo account play out, you get a real feel for how the market might have played out, how the account might have played out. So then you get an understanding of the personality of that particular set file. So in the future, you've got more data to make better decisions with. So here's an example. It's a single trade strategy by the EA. So it's opening a position and it's either hitting profit or stop loss. And it looks like he's got about a 1-to-1 ratio. It looks like his profits are making about 1% and his losses are making about 1%, bearing in mind slippage, spreads, and all of that. And here is 1, 2, 3, 4 losses in a row. And what he's saying here is a lot of people would have given up on this set and said this thing's broken and it doesn't work, and then turn it off right there. But by letting it play out and by trusting the process and the system, as hard as it is when you have 4 losses in a row, to continue to believe in what you're trading and what you're doing and believe in the data in the back test, he gets 3 wins in a row here. And the net of this is actually $6,000 in profit despite those 4 losses. And then he's saying, I could have hit my equity target of 2K and turned off and I would have missed these. I also would have missed these. And yeah, I would have been net profitable by turning it off early. But seeing the data here is also very valuable. And this is what I was talking about earlier, where there's pros and cons to everything. The pros of turning an account off after it makes a certain amount of money is that you reduce your exposure and your risk overall. The cons to turning it off when you hit an equity target is that you are reducing your maximal profitability you can make on that account on any given day, potentially. So when you have a day with losers in it, it's more impactful against the account if you wouldn't have let winners play out earlier on. So if you can bag more profit early, then the losses are less painful. But if you're turning the account off every time it hits a certain target, then if you do have a day where you lose 4 in a row, for example, it's going to be more impactful to the overall account. But again, the trade-off there is, well, you should be less likely to lose if you have a high probability set because you're more likely to hit your daily profit target. You always have to understand the trade-offs of decisions because there is no perfect decision and there is no perfect set. There is no decision that is, if I do it this way, I will win, guaranteed. There are no guarantees, especially in the market. So you have to understand the differences between the decisions you're making and the opportunity cost against those two things. And if you can do that effectively, even if you do have losses, you'll feel better psychologically because you will have expected that outcome based on your analysis before making that decision. And we can do a whole video on that if it's helpful. But that concept is really important to being successful as a trader, because losses are a part of trading, but you have to know how to manage them mentally so that your next trade isn't worse than as a result of that loss. Right, so we'll keep scrolling here. Let's get into Danny. Second payout pending, just waiting for Tuesday. This is FTMO. I love seeing these. FTMO is by far the most credible prop firm on the market. They are the most challenging with getting access to the funded account because of their rules. They do that on purpose. They maintain strict policy, but they have the best payout policy in terms of how long it takes them to pay out, in terms of number of payouts. They're not one of those prop firms that makes up rules on the back end and makes them confusing so that they can find any excuse not to pay you. So anytime I see a trader in our community getting a payout from FTMO, I'm so proud of that trader. Passing a challenge is one thing. Getting to withdrawal is a completely different thing. And we see it all the time inside of our community, just like the results you're seeing here. So congratulations, Danny, on your payout from FTMO. Here is Kareem. Feels good when you keep it simple. Just one set file, banking 1.6% on Euro USD on this account. So here's a really interesting one, right? So he talks about one set file. We talk all the time about how a single account can run 5-6 different set files of varying different strategies. And then you can use our tools like set compare, which actually allows you to see those sets stacked on top of each other historically. And you get to determine, do these set files ever take trades simultaneously and therefore increase my exposure? So you have the ability to put multiple set files onto a single account in order to increase profitability without increasing exposure and risk. Here's an example of the opposite of that. And let me read the comment one more time. I'll go back and read what Kareem said. Feels good when you keep it simple. This is so critical here to understand your own psychology. What is your psychology as a trader? Do you like to keep it simple? Do you like to make it complicated? And maybe complicated is the wrong word, but do you like busy sets that trade a lot and trade different instruments with different strategies? Or do you require something that's simple, that is maybe a little more quiet, that's not trading all the time? When it is trading, you know exactly what strategy is being traded and you know exactly which pair is being traded. Some people like that level of simplicity because it brings their anxiety down. Others get anxiety when they don't see a lot of activity and trades going on. So you have to understand your own unique mindset and build your accounts and build your strategies in alignment with that. If you try to build your strategies in alignment with something that makes somebody else happy, it's only going to cause you stress and anxiety when you're trading because you're not building something that's true to yourself. So again, Kareem here, feels good when you keep it simple. He likes things simple. He wants to trade one set file with one pair. Great. Nice and easy, 1.8% up on this account. Great job to Pierre. And that's an outstanding set to run. And hopefully, we keep seeing results like that. Okay, now scrolling down to Jake. Short the euro dollar worked out well for my seasonality idea post the other day. Yeah, so there was a post from Jake prior to this talking about seasonality, talking about analyzing market sentiment and then playing it into the EA to have directional bias on the instrument that's being traded. Here is a week of data on an account that he is testing, and it's up about 4%. So this is an account that will only take short positions on Euro USD. So yet again, another way to trade our EAs. You can set them up so that they're only short, only long. Again, different strategies, single trade, hedging and averaging, all kinds of different ways to do it. So Jake has said, hey, I've got an idea here. I want to test it out. I only want to trade, this instrument, and I only want to go in the directional bias that I believe the market is heading in order to reduce risk. And he's done that, and it looks like it's working out. It looks like he'll continue to experiment with that. Here's Paul. Been a tough few weeks on my funded accounts, but I'm still in the game, which is the main. Love that mindset. That's exactly. We were talking about this earlier, right? If you're still in the game, you're better than 99% of traders. Not been winning from a monetary point of view, but definitely gained experience. Creeping my FTMO back up with 1.6 week, switch off to my optimal till I have more data and a plan on how best to recover it. So he's got an optimal trader funded account as well as an FTMO. So he's showing here that he's had a comeback on his FTMO account, had a 1.6% week. Great, outstanding, love to see that. This more than anything is a win on the mindset, right? You're going to have winners, you're going to have losers, especially in the prop game where you've got all these weird rules that you have to navigate. It's not always easy doing that, especially when markets are challenging and highly volatile, but you're in the game, you're better than 99% of traders. So to come back 1.6% this week and start chipping away at some losses that you maybe had earlier, great job, Paul, and great mindset here to stay in the game and to keep yourself moving forward. Okay, here's Pierre once again. Gold was unforgiving this week, switched off and re-optimized. For now, I'll only do currencies. Midweek, I was up 2%. And at the end of the week, I was at 0.7%, looking to recover this week. Yeah, so I think we talked about this a bit earlier. This is just a little bit more color and detail on this. But again, this is great. These are decisions that you can make if you have the right mindset. I switched off, and for now, I will only do currencies. Well, I mean, that's an outstanding decision. Gold was on an absolute rampage during this week, and having a strat to say you could backtest, I could run a 6-month backtest, a year backtest, a 2-year backtest. Nothing in that backtest would have prepared me for the way the markets behaved in this particular week. And there's not much you can do about that. If you're a manual trader, maybe you can feel like you have some control over that sentiment or some understanding over that sentiment and make decisions. In the automated trading space, this is one of the best things you can do, is say, hey, I'm going to navigate this by pivoting my focus onto currencies that are less volatile right now. Let's look at miners. Let's look at currencies that aren't dependent on the US dollar, for example. Those are things that you can do to mitigate the risk when markets are extremely volatile like this and seemingly completely unpredictable. But again, still in the game and still profitable, better than 99% of traders. Great job, Pierre. Good feedback. Here's Michael again, back on track with his account. Let's move on. We've seen Danny kind of post a couple times, as well as Pierre. But you know what? This is a good one from Danny. Another withdrawal this week from FTMO. Talked about earlier how much I love seeing FTMO withdrawals. $6,000 in overall withdrawals from Danny. Great job. Outstanding. Nice work, Danny. Keep it up. Here's Michael trading Red Alert. So we haven't talked about this in this particular video, but Red Alert is an EA that we provide that specifically trades red folder news events. It's built and designed to take advantage of high levels of volatility before, during, and after those news events. And those are the 3 time segments that you can trade. You can trade all of them. You could pick or choose one or the other. It takes advantage of high risk reward ratios because of that volatility. And you can flip it one way or the other. You can have low probability trades with extremely high risk reward. We're talking 8, 10, 12 to 1 at times, meaning you risk 1% to make 10 or 12%. By the way, we've seen so many members in our community pass prop firm challenges using Red Alert because of those figures. You can risk 1% to make 8% on a Red Alert set file. And if you only need 8% to pass the challenge, you can do that, within one trade. But you get 8 attempts to do it, 10 attempts to do it, really, if you've got 10% drawdown because of that risk reward ratio. So it's a really good way to get through a challenge. But here is Michael. Red Alert today: mix of trading during peak volatile times of the day and unemployment claims. This was the Red Folder news event. So much scope with this on Red Alert. You don't need Portfolio Builder to test this EA. Yeah, so this is because Red Alert is a very niche EA. It's not trading markets all the time. It's only trading news events, and you actually identify the specific news event that you want to backtest to. There's not a lot of backtesting data that goes into it. You don't really need to sift through it using Portfolio Builder because the backtest is quite simple. And this is an example of what results on that would look like. So you can see this is a high probability set from Michael that he's running lots of wins here and no losses, and up about a little over 3%. So great job, Michael, there on Red Alert. Here's Paul. Doubled my account in 3 weeks using hedging and averaging. Yeah, this is something that we talked about in the community, that a hedging and averaging set would be interesting at this time because of the way the markets were moving. Markets didn't know if they were going up or down. They were swinging in a pretty wide range, and hedging and averaging is perfect for that, because if the market is likely to swing back into its original position, you can take advantage of hedging and averaging your position in both directions with both buys and sells. As the market's moving against you, you cost average your position, add lots to the position. As it swings back, you'll profit on one side and begin hedging and averaging on the other side. Looks like Paul was able to double his account in just 3 weeks doing this. I imagine the replies here are going to be a lot about how are you doing this, or how does this work? Yeah, how did you do that? I use hedging and averaging. Any tips? Yeah, this is just some dialogue going back and forth. And then I actually suggested that we do a live Q&A session specifically on this topic, which we will do in a future session soon inside of the community. So here's Peter. Not much on here in terms of a comment or context. Let's take a look. Profit of 10,000. Yeah, so this would be a prop firm pass depending on what's going on here. I don't have a ton of context. Maybe we'll dig into the comments and see, but this is a 10% on a 100K account, for example, would be a prop firm pass. Of course, if it's 200K or some other amount, it's not. If it's a cent account, obviously that's something different as well, but I can't tell from this, but either way, 10K up. You can see the trades here. Looks like primarily trading gold. You can see the different lot sizes indicating these are different strategies, different set files. So he's obviously got multiple set files running on this account. They all seem to be the single trade approach. looking like risking about 1% in exchange for 2% profit. So a 2-to-1 risk reward ratio, which is why you can see there's a couple losses here, but the wins far outweigh the losses, and there's some significant gains here. So great job to Peter. Let's take a look at the chat. Great results. What method are you running on this? Yeah, this is awesome, right? So Chris comes in and says, hey, what methods are you running? Peter says, yeah, first trade was red alert, take profit of 10 pips, risk 20%. Other is all banker, single trade, 4 sets, 1 set per session. Yeah, so this is all great. This is amazing. He's talking about the optimization. He did a 12-week optimization, 1 to 2 walk forward analysis, and 1 week out of sample. All of this is stuff that we teach inside of our POW members community through our weekly Q&As and our training about how to do back testing, how to do walk forward analysis, how to do out of sample analysis, how to mix red alert and trade red alert at specific times, but then also throw in banker, the banker 1 trade strategy, doing it on different sessions. So specifically optimizing for the Tokyo session, specifically optimizing a different set for the London session, and so on. So Peter is just absolutely killing it, taking all the things that we teach and bundling them in, and the results speak for themselves. It seems like, right? Like once you start following along and start finding your groove and your rhythm, the results will start to just speak for themselves. There's some more back and forth here. Chris says great system. So now, Chris can take those learnings, incorporate it into his own strategy, community helping each other all grow together and become successful. So this is absolutely wonderful. This is Kareem, who showed us, I think it was $6,000 in total withdrawals with FTMO. And look at his mindset. This is the mindset of a trader that's a pro and that will be profitable long-term, sustainably into the future. He's got a loss on his FTMO challenge, but it happens. Looking forward to next week. So all you can do is move forward onto the next journey, the next week, the next day, the next month, whatever it is. And look at the size of this loss. Let's really take this into perspective here. This is a loss of under 1% on the account, 880 total loss on the balance, including commissions. That compared to the wins on the other side, a good day equals up 1, 2, 3%, and a bad day equals down less than 1%. If you can do that consistently, that's proper risk management, leveraging the EA, then you're going to be profitable in the long term because you're properly managing your risk. You're not allowing your risk to significantly exceed your profits. And there you go. And then look at this. On the other hand, my new portfolio that I created since Michael's release of his single trade video this week, which we showed earlier in this video, and we will share on this video as well. You can click the link and move over to that video and see exactly what he's talking about. My objective is not to change the new optimization file I created for this, run profiles weekly, and collect the data to be confident enough to run it on challenges and live capital. I mean, just a perfect, this is the exact system. You hear us all the time talking about sticking to the system, going through the process. You find something new, you want to run an experiment on it, you run it on demo, you gain confidence in it, or you modify it to the point that you are confident in it, and then you move it to live capital and challenges and add it to your snowball of prop firm challenges, prop firm funded accounts, withdrawals into live accounts, and so on. And this is up, looks like about 2% on these indices that it's trading. So great job, Kareem. Once again, here's Paul. This is a great portfolio. Let's take a look. He's sharing his MyFX book. Yeah, 71% gain. That is quite a great portfolio. I assume this is a cent account. I believe it is. So 71,000 on a cent account equal to $710. It's 71% of whatever the account balance is. So nice job, Paul. Great job there. Here's Michael. What a week. Let's take a look at what that week looked like. Yeah, some losses mixed in here, but again, more wins and losses. So when it's something like this, where the risk reward is 1-to-1, it's not about what I said earlier, which is losses exceeding profits or vice versa. It's about probability. And there's more wins than losses, a higher probability of wins than losses. Then all you need is a 1-to-1 risk reward ratio, and you can manage your risk effectively and be profitable. And that's what Michael's showing here, 6% up on that account. Great job to Michael. All right, Shamit, let's take a look here. What do we got? Payout requested, payout request confirmation. This is from Fivers. It's a little under $1,300 payout request. Outstanding. I love to see the withdrawal requests. Love to see the funded trader certificates and all of that. This is outstanding. So again, and you saw some comments from him earlier about what he's working on. I believe we shared. So just yet another example of sticking to the system, getting to profitability, making that withdrawal, and then more to come. And you do a small withdrawal like this, I wouldn't even consider this small. This is significant, but this covers probably the cost of the challenge more And now you funnel these funds into purchasing more challenges or more funded accounts and or into cent accounts. And now all of a sudden, this starts to compound all of your other assets. You now can have 2 funded accounts. And if you have this times 2 next month, you can get 4 funded accounts, or you can increase your live funds. I mean, you just saw Paul, who had $1,000 in an account and had 70% gain. So if you take this withdrawal, put it into a live funds account, and then have, into a cent account where you can push the levers a little bit on the risk, you can turn that into an even larger sum, while also adding more money into that pool from the withdrawals that will come after this one. And that's really the key to compounding and making that 2 to 4% a month absolutely life-changing. Let's take a look at Ivan. Use my own tweaked low EMA set file. Can't complain. Love this. Okay, so a trend trading strategy leveraging EMA. Look at the win percentage on this. Wow. So these aren't huge. This looks like a bit of a scalp. 0.5 lots, 25, 75, 47 profit. So these aren't huge moves he's looking for, but consistent. Lots of wins, a little over 1% gain. Doesn't get much cleaner than that. Nice job, Ivan. Yeah, keep going with what you're doing, whatever it is working. Here's Paul. He's showing his back test results, it looks like. Yeah, so this is 154 gross profits. Let's take a look here. Equity drawdown, 20% or so, it looks like. Hard to see. It's a little bit blurry, but yeah, this is an example of a really nice set that Paul was backtesting. Look at all the terminals he has open. This is what we talk about here. 1, 2, 3, 4, 5, 6. He's got 6 accounts running, maybe 5 accounts and then a testing terminal. Who knows? But that's what it's all about. Diversified portfolios, multiple accounts running, different strategies, always testing things, letting things play out, hooking things up to MyFX book so you can constantly see the results and analyze what's working and what's not. And then you've got the ability, you've got all these accounts and all this data. You know where your confidence lies. You start to copy those accounts into different prop firm challenges, live funds accounts. Yeah, Paul's absolutely killing it. Here's Ivan. Once again, good week so far. 2 on gold with low EMA. This is the same set he was talking about before. He's now elaborating on how that test and experiment is going. We'll monitor further, but very happy with how it runs for now. And this is incredible. Look at all this blue. I mean, this is an extremely consistent set file with no losers. I mean, absolutely amazing. This is incredible. Really interesting what he's doing here. Other members will be able to pick up on this experiment he's running. And, we'll look into it too as the POW team. Potentially run a Q&A that dives into this a little bit more if it continues to run this way, and it can become a part of our strategy that our members will get to piggyback off of. Okay, so here is John. So you can see, obviously frustrated, lots of red on this screen. Don't like to see that. So here is, not sure what to make of that. Let's take a look here. Some losing trades here, obviously. It's hard to see what's going on here. I guess these are just losing trades. Here we go. Okay, so he's equity 40,000. I don't know if this is a cent account or what's going on here, but there's obviously some significant losses there on that. So he's a bit frustrated. Let's see what the replies say. Oh, this was his POW copy account. Okay. Yeah. This was, so POW copy went through the craziness of gold and actually came back, recovered all of the drawdown that it was in, made profit. We were hedging that account and it was moving pretty hard in one direction. We were hedging it in the opposite direction to offset the drawdown that we had, managed it all the way through the cycles, swung one way, swung back the other way, cleared out all the drawdown into profit, and it completely recovered that account. So this was, but yeah, John, we all kind of felt like this during the POW copy, for POW copy during that phase. Although, it is important to, again, it all comes down to risk management. It all comes down to what you're comfortable with in terms of exposure and risk. But it also comes down to the fact that POW copy in the last 6 months had doubled its account size. In the last couple of years, we've got a MyFX book on this as well. That account, let's actually pull that up really quick. Let's take a look at the master POW copy. You can actually see, so there was a bit of drawdown here in this portion of it, but you can see over time how this account has grown quite significantly up to where it is now. So it's give and take with these things. To have this type of equity curve is amazing, but you are going to have times in exchange for that of a bit of drawdown, and you've got to be able to really just find a way to keep your composure and ride it out and take some of the strategies that we've taught, like hedging against the move, the direction of the move, which is what we did, to ultimately recover that account. So let's move on to Kareem once again. Last week, I posted a loss on my main account. This week, a very nice 4% profit. Love to see this. So he's talking about his FTMO account, I believe, with only one set file, keeping it simple and easy to track. Caught the trends beautifully, banking in on them. Would have been beyond perfect without that 2 losses, but nevertheless, extremely satisfied with it. Also, another positive note is that I'm starting to feel a very big appetite for single trade Forex pairs, which opens up a lot of opportunities and diversity. Yeah, I mean, this is exactly the perfect mindset for this. So we had the loss, came back with a 4% profit the following week to not only make up for the losses, but put the account into profitability. He's using the single trade strategy. He's testing it on different pairs that haven't been tested on yet. It's going well. He's understanding that now not only can we do this on indices, we can do it on Forex pairs as well, which opens up all kinds of opportunities to trade in different ways, run multiple different back tests, and see what works. So outstanding job, Kareem. Okay, let's see what Sam's got going on here. One trade, 800 target per day. If we open up this image here, let's take a look. I assume what he means is that he's got a target. Yeah, so the EA, that's the 31st, 1st, 2nd, 3rd, 4th. Yeah, so it's just basically either going to make 800 or lose 800 on the target. So winning day, losing day, winning day, 4 out of every 1, and he's up 2.5%. Great job. Interesting strategy there. I mean, that's a really, we talk about trader psychology and how everybody's a little bit different. If you are a type of trader that doesn't like to see a lot of activity, that is a perfect strategy. That's like one trade a day, basically, that we're seeing. I think that's what he's saying here. One trade, 800 target per day. Yeah, great one. And then I chimed in here and just said, yeah, those single trade and target close sets are going to do okay right now. 2 options when market are like this: trade small or don't trade very often. Yeah, so when markets are extremely volatile, reducing the exposure to the market. If it's a losing day, take your loss and get out. If it's a winning day, take your win and get out, but don't be exposed to the market. That's one strategy that you can implement in order to protect yourself from the harsh conditions of the market. Some people, by the way, do great in harsh market conditions because they just do small lot sizes and they do a ton of trades. And I can do a video on that separately. I've got an account right now that's 0.01 lots, always trading, basically always opening trades, extremely high volume, but it's rarely deep in drawdown because the lot sizes are so small, but it's constantly making profit. The problem I think with that set is going to be, as I move it into live funds, is going to be the slippage and the spread. And live is obviously going to be significantly different than demo, but I know that in my mind. So going into it, I don't expect it to do nearly as well as it's doing in demo once I move it to live, but it's doing well enough that it's worth putting into a live account anyways. You know, those are the things when markets are very volatile, you can actually get away with super small lot sizes because of all the movement. There's going to be open and closes quite often. Okay, let's keep moving here. Let's see. Okay, Paul opened up a TC Bridge demo account. Super important here. We've recently launched POW Instant Funding. So we provide our traders now with instant funded accounts directly provided by POW. We've linked up with a liquidity provider that's providing the capital. These are live backed market accounts. This isn't some weird prop firm thing where they make all the weird rules and they take away your funded account or don't pay out your withdrawals. This is real live accounts specifically and exclusively for POW members. It's an amazing thing that we've been able to create here. The provider we work with analyzed our EA, analyzed the history of its results amongst dozens of different accounts from dozens of different users and said, hey, we've created this bespoke offer just for POW members who are using our tools. And it enables us to ensure that every single member in our community is trading with capital. They're not trading on demo. They get to trade on a real account with real money and keep 60% of the profits that are made. So we can more on that later, but that's what Paul's testing here. There's a version of this that comes with 1 to 3 leverage, which at first everybody says, how are we going to trade on 1 to 3 leverage? And I ran tests personally and have accounts running. Paul's showing his a test here, 100K account with 1 to 3 leverage. And you can see it might limit you on the number of set files you can have on a single account. It might limit you on lot size, for example, but this is a 25K account. You shouldn't have large lots anyways, but you can see Paul having success on that instantly in the test and then looking to move into a paid funded account soon. So let's see, Michael here, break even week on one account, forgot to replace one of the set files from last week and ended up hitting 2 stop losses on that file. Technically would have been a 2K week otherwise. Other account banked 1K for the week. Just rinse, repeat the process no matter what happens. Yeah, this is the mindset. Just keep moving forward. Keep doing what you know works. These are mental errors and mistakes. Maybe Michael didn't sleep one night. Maybe he just forgot because he was busy thinking about other things. It's all part of life. These things happen. All you can do is just keep moving forward. You know your process works. Variables and mistakes are part of it. But if you just keep moving forward in the long run, that 2 to 4% a month in the long run will always be true and will hold true as long as you stay consistent on your end of that bargain. Pierre back again. A small win for the week, but I did what was suggested in the Q&A and I stopped all trading for the rest of the week. I kept the portfolio running as that's down 1.3K, so I'm glad I listened. I'll take a small profitable week over a massive 1 to 2% loss anytime. Again, amazing mindset here from Pierre. And yeah, there was a bit of a warning posted in the group that said, hey, let's get all trades turned off. There's no reason to be trading in these markets with the announcements coming from Trump and everything that was going on. There just wasn't a reason to trade. So Pierre listened to that, ended up on a very small profit on the account. But again, if you're profitable at all, you're better than 99% of the other guys out there. So we will take this every single day. John chimes in here. Many ways to trade in these markets. This is a slave account that I'm reversing the trades on the copier. It was up 4% until a couple hours ago, but I'll take 2% a week anytime. Yeah, absolutely. This is great, John. This is reverse. So this is actually inversing the trades, taking the opposite position, which there is a lot of benefit to doing that. We can showcase that in our community. We talk about it all the time. But yeah, great job, John, here. And yeah, would have been up 4%. You never know when to turn off, though, right? You wouldn't have known to turn off here versus here, for example. If you would have turned off at any time, you would have missed the profit after that. To time this perfectly and know when to stop trading so that you miss the next loss, it's absolutely impossible. The results are what they are. You accept them and you move forward. There is no point in looking back and saying, what if? Because it doesn't matter. That's not the reality. And that's a huge one here. There's 18 replies here, so I'm going to open this up and just see. It looks like there's some back and forth. Yeah, okay, so just some dialogue and some banter. This is what I love about the community, by the way. Not everybody shares their results, but everybody kind of chimes in the threads in here and starts to go back and forth and talk about, they share ideas, how they got there, what they're doing that's working, how people can replicate what is working. Okay, here's Tariq. It's been a class month and week. 2 FTMO accounts in the bag. Amazing. Love this. 2 FTMO accounts passed. Amazing. 6-month test. Safe to say it didn't go very well, down 25K. Yeah. Well, that's why it's a test. That's why we start, why we back test everything. So he's testing, it looks like minors and kind of bespoke pairs. Interesting, really interesting. That's the thing with the EA. You can do anything really. So nobody's really tested this before. Go for it. You try it, see how it works. Didn't go so well this one, but yeah, it's uncharted territory. Maybe there's some modifications to the opt file we can make to get this on track. Gold 6-month trend range bin class 27,000 in 25 days. Drawdown is 5, which is amazing in my eyes. Single trades are by far my favorite. The account was at 55K yesterday, but all hit losses today, which is fine. I know I have too many set files on the account, but here to just copy one pair. Yeah, okay, so data and knowledge builds confidence. Yeah, so he's playing around with all kinds of stuff. He's throwing a ton of set files into a single account just to see how things work. He's got a lot of activity. Here's the EA. You can see in MetaTrader, you can see all the activity of the EA. It's telling you, if it's looking for a trend, it's telling you if it's scanning for setups, or it tells you news events of the day that the EA is going to turn off during these news events. So that's what you're seeing here on the screen. He's also put in screenshots here. Let's see what this next one is. Yeah, okay, so this one's got an open position. You can see what it's trading. So yeah, okay, so he's just got a lot of experiments and activity going on. So yeah, great job, Tariq, with everything you've got going on. Paul, trading Bitcoin. Hopefully no boring weekends anymore. Yeah, you trade Bitcoin, you trade 24/7. Let's see how he's doing on this account. This is really interesting. Using the EA to trade Bitcoin. Yeah, up a little bit. These are small positions. We'll see. We'll stay tuned on that with Paul and see how it goes. And then also Paul trading gold. Let's take a look at those results. Yeah, doing great. Paul is steady, stable. He's got all kinds of updates here for us. Let's see. Got myself 200K free trials from prop firms. One of them passed in 4 days. Always test your approach on demo first. Yeah, that is great advice. TC Bridge, instant funding, low leverage, ready for trading next week as well. So this is the 1 to 3 leverage account he had posted about earlier. Posted an update, up 1.2%. Yeah, see, no problem with that low leverage. This is a great set file too. Small lots, low risk, I bet. On 25K account, up 1K is great. Yeah, that's almost like 5%, I think. Okay, Michael, very challenging week across various different accounts. Here's the 2 single trade accounts I run. Weeks like this force me to reflect and think logically. So even in tough times, there are positives to take. Things I'm reflecting on. Are my accounts in line with my psychology, lot sizes, max sequence numbers? Would it be better for me to re-optimize my portfolios more frequently? What can I improve on in terms of organization? These thoughts and reflections lead to new behaviors, new actions, and new exploration. Yeah, this is the mindset that you want to have when you have a losing week. And you will have losing weeks. If you think you're going to win every week, it doesn't happen to anybody. But if you're profitable, you're better than 99% of traders. Even if you're break even, you're better than 99% of traders. So thanks for sharing this, Michael. It's important to share losses as well as wins. This one's up 3%. I think this will be that same set file down 2%. Again, though, wins are outweighing the losses. It's funny the mindset that you get into when you're frustrated and you tell yourself, hey, it's a losing week. But then you zoom out and you look at the big picture and the account is up overall. Again, you're better than 99% of the traders. So it's great that your expectations and your experience has been so good that even a losing week that doesn't bring you to net loss, keeps you in net profit, still feels like a loss to you. That means you are in line with the profile and expectations of a trader that's profitable long term. So it's a great sign. Just even that perspective is a great way to look at it. Here's Paul, 0.6% up on my POW instant. So Paul took advantage. He was an early adopter. He jumped on right away the 100K instant funding offer, and he's already up 0.6%. And then he's got 200K FTMO challenge, 100K optimal, recovering them with double confluence portfolios. So let's take a look at what he's got here. He's showing some wins and some losses. This is, I believe this would be his 100K funded POW instant funded account. So that is great news there. And then he's got his other accounts shown here, up 0.6%, up 1.6%. So yep, even with some losses, he's recovering. He's seeing profitable weeks. Also down 0.7% week on the cent account, but we'll take that after seeing 23% drawdown and closing out with some losses. Yep, so he recovered after a significant drawdown. So great job, Paul. Kareem, a brutal week for me, down 3.2% on my FTMO challenge. I can see also that some fellow POW members had a tough week as well due to the crazy markets and that our strategies are not wrong. Key takeaways. This week, before this week, my sets did so well that I decided to leave them running for this week as well. The opening Monday was brutal. Yeah, see, this is the thing. If you've got a strategy to re-optimize on a certain basis, you can't change that just because it's going well. You make a decision in your trading plan that you're going to re-optimize your sets every 2 weeks, every 4 weeks, every 6 weeks, whatever it is when you start. You made that decision from a purely logical point of view because the set hadn't traded yet. You have no emotional bias coming into that decision because nothing's played out yet. The minute you press go on that set file and it starts taking trades, emotional bias is entering the picture constantly. So you are in no position to rewrite your trading plan after the point of initiation. And that's really, really important. So that's the lesson here that I think Kareem learned on this, is that if he's made the decision to re-optimize on a certain basis as part of his trading plan in the beginning, you can't change that because things are going so well, you don't want to re-optimize it. It's easy to do. You get FOMO. You feel like, oh, why would I change this? It's working so well. Well, you're changing it because your trading plan told you to change it. There was a reason you made that decision in the first place. Before emotional bias entered the situation, don't change your decision now that emotional bias has entered. That's really important. Number two, when markets are like this, it's best to reduce risk by copying over with a lower multiplier. Couldn't agree more, 100%. And I've stated this too in the community. Small lot sizes, when you feel that pressure of the market and you feel people talking, when people start talking about the Forex markets and the stock markets, and these are people that never talk about the moving markets and have no idea about trading or anything, but they're talking about it every day. These are some of the indicators that, okay, this is a strange time, a time of high volume, high volatility. I should reduce my lot sizes significantly. Cut them in half, cut them in 1/10. Let the thing trade, let it play out so you can still understand how the markets are moving. And you're going to be annoyed. What's going to happen is you're going to cut your lot size by 1/10, and then it's going to bank $100, what would have been $1,000, and you're going to be upset that you missed that. And I promise you that's going to happen. On the other side, the losses, you're not going to suffer losses, but you won't think the same way that they're more likely to be upset about the things that they didn't get rather than protecting them from the dangers. That's going to happen, but you have to know that it's a long tail game. These things are, they're going to be conditions that change constantly. The markets are going to be extremely volatile. It could play out well for you. It could not. But the thing you have control over is your risk exposure. So when the markets start feeling like this, reduce your lot size and be okay with lesser profits because you are protecting those accounts in the long run so that you can have your 2 to 4% in the long run and be sustainable. And remember your goal. Your goal is not to make a bunch of money today and be done. Your goal is to make a bunch of money consistently, sustainably over the long run so you can give yourself back more time, so you can leave the day job or whatever that is, whatever your personal goal is. So reducing lot sizes when markets are like this, completely fine. I highly recommend anytime you're feeling anxiety or stress about the sets you're using or the way the market is, the best thing you can do is just trade small. Guys, that's kind of the community recap there for the week. So hopefully you enjoyed the recap. And again, there's so much more inside of this community. There's courses in here where you can get access to training on how to use the EAs, automated trading courses in general, all kinds of good stuff here in the community. All right, that's your inside look at the wins and challenges our members faced this week. If you're interested in becoming a part of POW, hit the link in the description to apply. If you're accepted, you'll unlock our new limited time instant funding offer. That's a $50,000 funded account. No challenges, no delays, delivered within 48 hours, provided directly by POW. The account offers 10% drawdown, 60% profit split, and the ability to scale the account up to $1 million. The capital is provided by a liquidity partnership that we've established directly, so there's no phony prop firm games, weird rules meant to make you fail, and so on. We want our traders to be successful, so we provide them with the community, the tools, and now the capital to be profitable. Thanks for watching, and we will see you in the next video.